So with everyone so strapped for cash, people are looking for alternative ways to access new funds. In today's video, we're going to be talking about one of those methods, which is a HELOC, aka a home equity line of credit. We're going to go over what it is, what are the benefits, who should be applying, and who shouldn't be applying for these things.
Stop wasting money on that dumb shit and instead put it in investment. I know it's tempting. You'll spend it and be broke again.
So welcome back to our channel, guys. I'm your bro Ryan.
And I'm a real Taylor.
So jumping right into it, what is a HELOC exactly? A HELOC stands for a home equity line of credit. Now, what the heck does that mean? It is a revolving line of credit secured by the equity in your home. Now, to put that in layman's terms, that's how a credit card works. It's a revolving line of credit. You spend it and then you pay it down, and you spend it and you pay it down, and you just keep using it. Versus a loan that you'd say go get $5,000 and you just pay down that $5,000, the principal and interest. And the HELOC portion is that home equity. So it uses the home equity to back it. So it's backed by something, and then you just pay interest on it. So it's just interest-only payments instead of, again, like a loan, paying principal and interest.
So what are the benefits of HELOCs? Well, the biggest one that a lot of people look at is it's a cheaper interest rate than credit cards. As far as revolving credit goes, this is one of the best you can find. And like Ryan mentioned, it's interest-only payments, and you can borrow kind of over the entire period, which is typically 10 years. Now that can vary a little bit, but that flexibility is a great benefit. On top of that, if it's used for home improvements, a lot of these interest payments can be tax deductible.
Now that sounds great. Where do I sign up, right? Well, hold on. Some of the drawbacks of HELOCs is they do have variable rates. So from 1 month to the next, it could change drastically. And just like with COVID, when we saw rates plummet and then we saw them shoot up, your HELOC would be affected by that. So it would shoot up as rates shot up as well. But if they got cut, it could be beneficial. So you just don't know. The unpredictability of it is the scary part. And second, the big risk factor is risk of foreclosure. So the interest rates are lower for this form of revolving credit versus credit cards because it's actually backed by something. Yeah. If the bank were not to get paid, they would take your house. They would foreclose on your house versus a credit card. If you weren't going to pay the bank, they just basically ruin your credit. So who exactly is the HELOC for? Typically, homeowners with a lot of equity would benefit most from this because you can only use that revolving credit limit up to usually about 80% of your equity. So if you only have say you only have $10,000 and you want to try and tap into that, you really wouldn't get any benefit. Yeah. You would be no loan. I don't think anybody would even do it, to be honest. Just wouldn't be worth it. Versus those people that have had the mortgage, they've paid it off, they have a $400,000 or $500,000 cash, all equity. That is somebody that would be able to tap into a large amount of revolving credit for whatever they need it for. Another person that would be great for using a HELOC is maybe someone that has high credit card debt, or they're looking at someone that has really expensive student loans. So they're private student loans at like 15 to 20 something percent, and your HELOC you can get at 6 to 8%. That can save you a lot of money because you're going to put it all on that lower interest, so your payments are going to be much lower, and it's interest only, so you can attack that principal, make the interest payment, and just attack that principal. Yeah. So that can also save people a lot of money using it that route. Another person that would be good for using a HELOC would be someone with a good credit score that's looking to make, say, large kitchen remodel or a large purchase. And so that good credit score would help them get a better rate, and they could finance it on a lower revolving interest and pay it basically as if it were a big credit card, pay for that kitchen remodel, and then pay it back off as soon as they can. Typically, you don't want, since it's going to be a large purchase, even though the rates are lower, you don't want to let it just linger forever. Yeah. You want to pay it off as soon as possible, but it can help for that quick, larger purchase.
Yeah, now that big purchase can be something as big as another investment property or something like that. People have taken out HELOCs to afford a down payment on a home. Things like that. I mean, it's very flexible. Flexibility is one of the pros. Of course, there are the cons we listed, but it's really up to you what this is used for. Now, don't get ahead of yourself. There are people that shouldn't be applying for this. Kind of just the flip side of what Ryan said. If you have bad credit, if you're just a short-term borrower, if you don't have a lot of equity in your home, like he said, a lot of people probably won't even accept you, but if you do, you're just not going to have access to as much funds, so it's not really as big a benefit for you. And just those with high debt, I mean, all those will just make your terms less favorable, and with a alternating kind of interest rate that can change over time, that's really not something you want to take a chance on. So unless you plan on using your HELOC to pay off some high interest debt, you really don't want to use one because you already have a high existing debt. Now, jumping right into some statistics about HELOCs, just so you kind of get an idea of what it's all about. The average HELOC rate as of January 2025 is around 8.26%. Now, given that we're talking about real estate related things, you may be like, well, that's higher than mortgage rates. No, we're comparing this to a revolving line of credit, like credit cards that can be upward like 30%.
Right.
So when you consider it in that aspect, it's so much better. On top of that, the average home equity in the US is just under $320,000. As far as HELOC usage, many homeowners use HELOCs to finance home improvements, consolidate debt, or cover unexpected expenses, kind of like what we mentioned earlier about the benefits and what you can really use it for.
So yeah, HELOCs can be used for many different purposes, sometimes very great purposes in terms of closing on an investment property or financing some kind of emergency you didn't expect, but also be on the lookout. Maybe some individuals should not tap into HELOCs because again, it can foreclose on your house. So you don't want to say, I'm in a lot of debt, let me add more debt, not consolidate, but add more debt and then end up losing your house as well as be in debt. That would not be a great plan.
Yeah.
So just be on the lookout, do your research, always ask for financial advice from a financial advisor. This is just good information purposes only, and hope you guys enjoyed this video and got something. Please let us know in the comments if you learned anything new, and please, please, please share this with a friend. We look forward to seeing your comments and seeing you guys in the next one.
Stop wasting money on that dumb shit and instead put it in investment. I know it's tempting, you'll spend it and be broke again.